So let's talk about stocks. This is the world I came from. 16 years as an advisor, and as a high level advisor. I was one of the top guys at the firms I was at, and I was managing millions and millions and millions of dollars. And, while I was an advisor, I still had a lot of problems. As an advisor, I made a lot of mistakes. 2008, I was all in. I was invested. I did everything that I was taught to do as a high-level advisor. Buy stocks, bonds, mutual funds, ETFs, all this different type of planning. I was practicing what I was preaching. And in 2008, I almost went bankrupt. So if I knew all this stuff, if I knew what to do, or at least I thought I knew what to do, why did I almost go bankrupt in 2008? Well, the answer is because I was only using conventional financial knowledge. I was literally following the leader, and that leader took me right off the cliff. And that's happening to so many Americans right now because so many people don't know what to do with their money. They don't know what advice to take. So they rely on the main media or the advisors or the financial companies to give them guidance. Well, folks, let me ask you this question. If your advisors told you to stay invested through this whole thing, how are you feeling about that suggestion right now? You see, I was out of the market last year, and I suggested people get out. Some listened, some didn't. Those that didn't are probably regretting not making that decision because that cost them a lot. Markets work in very, very predictable patterns that are so easy to follow that even the most novice investor can follow patterns. The problem with patterns is everybody's always greedy and everybody's always looking for the top and they're always looking for the bottom. And that's the biggest mistake. You will never, ever, ever be able to time the market. You'll never know where the exact top is and you'll never know where the exact bottom is. So if you're sitting there waiting out for the very top and then you're going to sell because Warren Buffett says, buy low, sell high and don't lose money. Well, guess what you just did? If you were waiting for that top, this is about what it sounded like on the way down. That's right. It didn't feel so good going down because you were greedy and so many people were. And then we're scrambling after that. We're scrambling trying to figure out what's the play. We go to the people that give us the advice, the advisors, and they say, oh, well, we're in this for the long haul. If you don't sell, it's not a loss because it's just a paper loss. How does a paper loss feel? When you watched your retirement go from where it was down 30% or 40 or wherever you happen to be sitting at now. But a lot of people are starting to feel a little better because the market's been coming up, hasn't it? Some people are like, whew, dodged a bullet there. It's coming back up. I'm safe. Maybe I should start buying back in. What are you thinking right now? Let me ask you that. Are you thinking now is the time to buy back in? Do you think this is that moment where you should be buying back in? Listen, I'm not the oracle. I'm not the guy that has all the answers, and I can't foresee the future, but I can certainly tell you that if you think right now is the time to buy back in. Now, I'm not saying there isn't some stocks that really, really are ripe and ready to be bought. And I'm going to talk about maybe the airlines, some of the airline stocks, some of maybe the car manufacturer stocks are really, really good value based on fundamentals. But for the overall markets, is now the good time to buy in? Well, you know what? Let's just debunk facts versus fiction, because you know what? Everybody, including, and in no disrespect to the president, but he's going on saying the markets are coming back. They're only a little bit off the highs and blah, 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 which gives people false hope. I mean, I get why he's doing it. It's an election year, and he's correct. It's factual that the markets have come back up, but he's not really talking about the facts. That's the fiction. You see, what everybody wants you to believe is that the markets are coming back up because they have something to gain from it. The president is going through, he's in an election year. And the Democrats, like, whatever. I don't take political sides. I hate politics. I think politics are just one giant lie. And it doesn't matter who says what. It's all for an ulterior motive. So if he's saying the markets are up, that's good for his election, right? Isn't it? Isn't that good for an election when the markets are up? You're darn right it is. He did build one of the strongest economies in the world. He did do that in the time he was a president. And now we're kind of falling apart because of a virus. But let's look at the bigger problems as to why I'm going to sit here very accurately and tell you that we have not seen the bottom, and why people that are buying in right now without any knowledge, not looking at the facts, I want you to know that it's a trap. Hedge funds know how to play this market. Big institutions know how to trade this market. Matter of fact, institutions control about 80+% of the market. Big money. I'm talking about pensions. I'm talking about the big money, hedge funds and all these things. They control about 80% of the market, which means, and it's actually more than that, which means the average person, you don't control anything in the markets. You are along for the ride. And what ride do you want to go on? You see, they understand how to play the game. And if you guys are starting to understand a little bit more about what I'm talking about what's fact and what's fiction, then here's to you. Yeah, that's right. That's to you. Those are the facts you need to be looking at. Those are the things you need to be paying attention to, not the fake news, not the speculation, not the hope, because the last time I checked, hope doesn't get you all the way there. Facts do, because facts and history is what we need to be going off of. Because if we look back in history to other recessionary periods and how it happened, I can tell you that would give you a glimpse of where we're at. People that are diving back into the stock market, well, first off, I just think it's just bloody foolish. I think it's completely fiscally irresponsible. And I think it's a sign that not enough people know how money really works. And I don't blame them, because you're never taught how money works. Folks, you have never been taught to understand how money works. They don't teach it in school. They don't teach it in college. Heck, trade schools barely even teach it. The only way you learn it is to seek out the knowledge yourself. And you know what? Will Rogers, and if you follow me, you've heard me say this a million times, but you got to understand this. Will Rogers says the best quote ever. He says the biggest problem in America is not what people don't know. The biggest problem in America is what people think they know that just ain't so. If there is so many people out there that think they know what they don't know, and they're making bad decisions. And the worst part is, let them make bad decisions. That's their fault, right? But people are following them. They're making suggestions and giving advice to people on knowledge that is not real, that is speculative at best, that is based on not real facts. Look at history, because it repeats itself. Look at 2008 and 9. What happened after? The whole thing came crashing down, but what was the aftermath? It was bad, folks, and this very well could be worse, because we're not all the way down. We're just not. This is speculation, and if you're buying into the nonsense, and if you're buying into the speculation, you're going to get hurt. So you need to get knowledge. You need to get educated. You need to start learning what it is. All this, here's the beauty. We live in a very unique time, a time where all the knowledge you could ever need is out there free. Literally, you're watching this on YouTube or Facebook or one of my channels, but the knowledge is out there. This is going to be live on YouTube. There's a ton of different traders on YouTube talking about the same things, about how they're trading. See, we're making money. I can trade and buy stocks and buy options and trade this market and make money every single day, no matter what direction the market goes. If it goes up, I know how to make money. If it goes down, I know how to make money. If it goes sideways, I know how to make money. But most people don't. Matter of fact, probably like 99.9% of the people out there don't have a clue what I'm even saying, because they've never been taught that. It took me 16 years to learn how to do what I do. And you, based on today's technology, could probably learn it inside of 90 days. But how many of you would actually spend the time into that? Maybe it's just not your cup of tea. Maybe it's just not something that you're interested in learning. And that's fine. I get it. But if you don't want to learn, why would you take action and jump in when you don't know what you don't know? Is it because you're taking knowledge or taking advice from someone that also doesn't know what they don't know? Are you being led off of a cliff? That's the question you need to ask, because what goes up must come down. This little pop that we're seeing doesn't factor in the unemployment numbers. I couldn't believe it when I saw Monday in the news, the top-down analysis that I did, the unemployment numbers were skyrocketed. And then I watched the news, and it was just like, you know, the next couple of days have been positive increased days. Actually, yesterday, when we were looking at it, I do some coaching on the how to do this top-down analysis and how to, you know, trade and do this. But in the morning, we watched the markets were up. It's called the pre-markets. All the other countries' markets were up. So we're like, wow, it's going to be a bullish day. But why is it going to be a good day based on the knowledge and based on the news? So the market started up, but then finished down. This was a trap. The big institutions know that if they can get a bunch of money in that drives the market up, then they're waiting for it to get to the top. And then what do? They take their profits off the table and it crashes it back down. Yes, they made money, and the average person lost money. If you don't think this is how it works, folks, open your freaking eyes and take the rosy colored glasses, straight off, because these glasses give you blurred vision. They give you double vision. You can't make solid information and decisions off of rosy colored glasses. You need to learn for yourself. You need to start taking back you need to start taking back control of your money and start learning how money works yourself, because this is the time. You now have time. When else in the last 11 years have you had the time that you have now? But what are you doing with your time? What are you doing with this God-given time? I don't want to say God-given time, but that is what it is. The one thing we can never get back is time. We can lose all of our money and get that back, but we can never, ever get time back. I want you to understand that. That is the most valuable thing that every single one of us has, is time. You can never get it back. So what are you doing with your time today? Are you learning? Are you trying to understand this? Are you trying to understand why so much of the news and so much of the information you're getting is not real? It's fiction. Are you really digging for the facts and trying to figure out what's real and what's not? Does it even matter to you? Maybe it doesn't. If it doesn't matter to you, what are you passionate about? What do you really want? If you lost your job and you're wondering, what should I do next? Here's the good news. You literally have a blank canvas. Well, that didn't break. If you are in this situation right now and if you lost your job and you don't know what is next, the good news is, folks, move it over this way. This is what your life looks like. A blank canvas. You have the ability to draw and create whatever life you want right now, but it starts right now. Time is not going to be on your side. Every single day, that's a guarantee. There's less time. You have less time every day. So every single day counts. Every single hour counts. Every single minute counts. And every single second counts. Every single one of them. Because the buck stops here. That's what fell. You need to start figuring your plan out. And how you figure your plan out is you start with, as one of my mentors told me, you start with your perfect day. What is your perfect day? What does your perfect day look like? Literally, draw out your perfect day from the second in the morning. Sit down one morning with your coffee. And I want you to visualize what the perfect day is. From the second you open your eyes, what do you see? You're looking out big glass windows or big glass sliding doors, and the ocean's there and it's crashing and you can feel the ocean breeze. Look, I'm telling you, my perfect day. And you look over and your beautiful spouse is right next to you, and you get up and you go down to your beautiful kitchen in this open concept that's overlooking just the ocean or whatever your day is. You get the thing. Every step of that day, what did you eat? What kind of coffee did you drink? When you walked in your garage, what does it look like? Where did you go after you did that? Did you give your kids and your wife a kiss, or husband or whatever, a kiss goodbye? And where did you go? Did you go to your beautiful office to work in a great environment where there's a great culture, where you are surrounded by smart people that are doing unbelievable things to help other people, on and on and on? If you don't know what your perfect day looks like, what are you working for? What are you literally working for if you don't know what that perfect day is? Start with the perfect day. Then after that, that's your canvas. That's the most important picture. Frame that son of a pup and put it on the wall. Your perfect day. It's not going to be one page. It's not going to be 2 pages. It should be many pages long, because it's your life. Then reverse engineer that perfect day. And folks, you can do that right now. What will it take every single year in income to have that perfect day? Then what does that equate to monthly, weekly, daily, every hour? How many phone calls do you have to make every hour? How many people do you have to touch and help every single hour, every single week, or every single day, every single week, every single month to get that perfect day? And if you think you can have that perfect day by being selfish, by being greedy, and by following people that are giving you false information and by leading you off the cliff, then you are completely lying to yourself. And that is a darn shame. You have the ability right now to create whatever that perfect day is. Whatever that is, you have the ability to have it. But you need to start making plans and taking action. Are we thinking that now is a good time to buy stocks? Well, if we are thinking that now is a good time to buy broad-based stocks, maybe we need to look at, where is the market going to go down? Can it go down lower? I think it could go down a lot lower, just like shown there. And if it goes down a lot lower, do you want to buy stocks now and watch them go down and down and down? No. So do you want to long stocks? Do you want to buy stocks for the long haul? No. Maybe oil, because oil's getting ridiculous right now. Do you guys realize that oil went negative? Now, a lot of people called me and said, how can oil go negative? How can a company go negative? No. The broad base went negative, which is because of a lot of things I don't even want to get into. But are the stocks, like the oil stocks like Shell, BP, Exxon, are they negative? No, they're just coming down in value. So is now a good time to maybe look at buying some oil stocks? Sure. But just understand that they can go lower. So if you do buy oil right now, which probably wouldn't be such a bad play, because does anyone think oil is going to go to zero and stay at zero? Nope. So now might be a good time to look at that sector of looking at oil stocks and picking ones that you love, because they could go lower. So you always want to buy stocks that you love and are passionate about, or that you are okay with handling if it goes lower. So if you bought here and it goes down to here, are you okay with hanging on to that? Yeah. Well, that's what you got to look at. Okay. Maybe you love a company like Tesla, like I do. So did I buy Tesla long? Yeah, I bought it to hold it, but I bought it at $415. Okay. Because it was down to 415 at the early big first drops of this thing. See how fast that thing goes down? So if you're going to buy stocks, you just got to really look at what it is you're buying, what sector you're buying, and is that sector is that sector low enough for you? You never, ever. I had somebody yesterday send me a message and say, I'm going to buy at the bottom. And I kind of, in a nice way, because he's a great friend of mine, great guy, I kind of said to him, good luck. You're never going to know where the bottom is, and you're never going to know where the top is. And by the time you hit the bottom, it's too late. By the time you hit the top, it's already too late. So just stop trying to time the market. You can't. Trade the patterns. Trade the things that are super easy to see. That's what I like. I like to trade in a way that literally a fifth grader could understand it. There are ways, if you learn to trade inside of these patterns, inside of the uptrend, the downtrend, the patterns that we're talking about. Are there ways to make a lot of money? Yeah. You guys keep hearing me talk about this, right? Like how you can make 40 to 200 or 2,000, like I said I made earlier today. Yeah, you just trade the pattern. You just trade individual ceiling and floor levels. Not everybody can be a day trader. First off, most platforms, I use TD Ameritrade, and that's what we're going to teach on in Money School TV for what we're calling the 10-10 stock trading platform. 10-10. I'm not going to tell you what that means, but 10-10 stock trading platform. That's what it's going to be. We're going to just show you basic stuff. We're going to teach you how to open up an account at a brokerage like TD Ameritrade. We're going to teach you what things you need to do to open up and have it right, because you're going to need to be able to day trade. Most of them require you to have $25,000 on deposit to day trade. Plus, if we're going to trade derivatives or what they call options, we got to be approved to trade options, which means you're going to have to go on and you're going to have to get either a level 3. There's level 1 through, I think, 4. I might be off by a little bit on that, but I'll double check. You have to be approved for an options trading platform, and not everybody gets approved. So to do the things that I'm doing, you have to be approved to do naked puts and naked calls, which is risky, but if you know a thing or two and you follow the rules, it's super simple. What I'm going to teach is super simple because it's nothing you need to know. You just follow the rule. Okay. You do this, and that's it. And you don't be stupid and stay in a trade longer than a day. You know how you really minimize your gains? You're going to minimize your gains, but you're going to control your gains and you're going to minimize your losses. You want to know how you do that? You buy in the morning or sometime in the morning, and you sell before the market closes every single day. Now, today, I sold all my positions and I made a lot of money, thousands of dollars in one day off small trades, less than $10,000. And I made about, I think it was $2,875. That's right. Off of less than $10,000. That's what I made. But in order to do that, I have to make decisions. My decisions were to buy in the morning. And what did I short? I bought this. Okay. Here's one I bought. I'll just give it to you. SEO. I bought it. And look at what it did today. You don't even need over here. You don't even really need to know what it did, but look at that pop. Okay. How did I do today? Well, 52.24% on just this one. I mean, I should have just went all in on this, but I didn't because I diversified amongst a couple trades. And what is this? This is just, I'm shorting oil. That's all this one is. I'm shorting oil. And I looked at all my charts and, do I think this is going to go down tomorrow? Well, based on my numbers, it probably could, but it is getting in what they call an overbought situation. So am I going to buy this again tomorrow? I don't know. I'll watch it and I'll see what's going to happen, but I like that. Anyone, how many of you, give me a thumbs up if you guys like that right there. Give me a thumbs up because that big pop, man, that's good. But sometimes that's just luck, right? Sometimes that's luck. How often does oil fall like it is? Not very often, but you know what? Every dog gets its bone once in a while. Well, I got my bone, right? So what else I do is I buy in the morning, okay, and I just pick whatever stock I want. I pick whatever stock I'm going to short or whatever stock I'm going to buy puts or calls on, and I pick that in the morning and I pick the direction. Are we going up or are we going down? I don't trade sideways anymore. It's too boring for me. And right now, not a whole lot of things going sideways. They're either going up or they're going down. And most of them are going down, just like I said. So we know our direction. We know our pattern, which is down. So we just got to pick what companies do we think are going to go down more than the other. I took my bets on oil today, oil and the general markets. Okay, like the indexes, the Dow Jones, the S&P 500, the NASDAQ. You can pick any of them because if the overall markets are going down, that's a safe play. And you can basically short them. You can basically go what we would call short on them, which is the opposite of going long. If you're going long, you're going for the long haul. It's just like, a long pass in football. Keep going. And I throw and it never makes it to him. But short, I got the short game down pretty good. Like as soon as you get the hike, you got the ball, and you're like, hey, right there. You just put it. Whoa. Got a little excited there. You just put it off and you put it in their hand. That's easy. I can play that game all day long. The long, I just can't throw the ball that long. And I just don't want to because it takes a lot of accuracy. I got the wind direction. You get the drift. I don't play that game. So I play the short game, which is in the morning, out before the market closes. Now, do I give up gains in doing that? You're darn right. You're darn right. Because if I stayed in and the market goes down even more tomorrow, could I make more money if I stayed in? Yeah, because I bought for lower. But tomorrow, I'll just repeat the process. Now, will I make as much doing that in the long haul? Nope. But will I control my gains and losses? Yep. So even if I lost money, even if I bought something in the morning and maybe I picked wrong, Carnival, okay? I bet against Carnival, and for some darn reason, I'm still showing a loss of $14. I lost a whopping $14 today on Carnival. How in the world does Carnival, that cruise liner, right, the big giant ships out there, how does Carnival go up when everything else is going down? I don't know. I didn't dig into it deep enough, but I lost $14 on that one. Darn it. Terrible. But I also bet that Disney, Mickey Mouse, I bet that was going to go down. Got that one right. Pretty much got it all right, except for that stupid cruise liner, which I missed. Now, again, I'm in the morning and I'm out in the afternoon. If I lose, do I care? Well, of course, no one likes losing, but I'm controlling my losses because if I hold out until the morning, I lose a lot of controls over the time when I want to sleep. I just want to go to bed, man. I don't want to worry about, oh man, is it going to go up? Is it going to go down? What's going to happen in Japan? What's going to happen in Europe? Oh my God, what is going to happen? Nope, I'm out. Next morning, it's just like brushing your teeth, man. You put the new toothpaste on, you do the brush, same thing as you always do. That's what this is like, folks. So that's all this is. Can everybody see that? What color is that? Red? Do you all realize an hour ago, the market was up over 200 points. Now, I know that's probably hard to see for some of you right there, but right now the Dow Jones is down 247 points. The S&P is down 50 points. The NASDAQ's down 302. The NASDAQ's down almost 3% today alone. Therefore, Bitcoin is 29,000. This morning and yesterday and the day before and the day before and the day before and the day before, I have been buying Bitcoin and a little bit of Ethereum. Do you know why? It's been going down, down, and down. Now, I want you to look at this. I drew this a while ago. Some of you may have even seen a training at the 3-day event that we did. The last one, I showed this. See these levels? 30 to 40, 40 to 50. I just want you to look. Everybody see these levels. These are just levels, okay? Think of it as the floor and the ceiling. Think of your floor and your ceiling. It's all I want you to think about right now, okay? That's all these are. They're just levels. And in any skyscraper or any big building, when they add floors, they put a new floor and then they add a ceiling, right? But that can't happen until the floor is secured. Let me just teach you something really quick and really easy, and this is not difficult. So please, please, please don't make this complicated because it is not. A floor and a ceiling is created when a stock, or in this case, Bitcoin, touches that floor several times over a period of time. A shorter period of time is better. So we got 1 touch, 2 touch, 3 touch, 4 touch. Floor made. 1 touch, 2 touch, 3 touch, 4 touch. Pull up any chart and just grab a piece of paper and just put the paper on there and just be like 1 touch, 2 touch, 3 touch, 4 touch. 3 is good, but 4 is better. 1, 2, 3, 4. Everybody sees that? We got a touch there, a touch there, touch there, touch there. $30,000 level. Okay. So now I've solidified that I have a floor. And now I know one thing. Now that I've created a floor, I know for a fact that no matter where we go in the future, that is going to serve as a solid landing place for this particular security, Bitcoin here. And here it is, touched again. And then it didn't touch. We're up here, but we are actually touching this now. Now this is old. Okay. So I don't get it in the future, but right now, are we not touching the $30,000 floor? Is it not having a hard time glowing over the last week or even longer? I think it hasn't gone below, maybe a slightly below, but 29, because there's a floor. It's hard to break through that floor, man. You need a jackhammer. You got to hit that thing with some force to break through that floor. Everybody understands the floor. The same is true for ceilings. So now, I mean, many of you have maybe ripped a ceiling out or two, but there's studs, there's all sorts of stuff. You got to hit that drywall hard, then it falls. You got to hit it hard to get to the next level. If you wanted to not take the stairs and just go through the ceiling, you got to put some effort in. So here, same thing. 1 touch, 2 touch, 3 touch, 4 touch. Ceiling. Now what I know is I know that that security, Bitcoin in this case, will run from that floor to that ceiling on a pretty consistent basis when it's in that range. So when it was in this range, if I bought around 30 or 32, you're never going to get it at the bottom and you're never going to get out at the top. Are we clear? You'll never get it at the bottom and you'll never get it at the top. I just want to make sure you guys understand that. That's called greed. You cannot time the market and you will never get a top or a bottom. I don't care how good you are. If you do, if you're like, well, you could, some of you might say, well, Chris, I did it. You got lucky. Probably can't consistently do it over and over. But if you have these levels, you can get close. So what I was doing, this is a while ago, this is December 20th, I would buy between 30 and I would sell right around 40, 30, 40, 30, 40. Boring. You know, oh my God, people say, oh my God, you would have made so much more money, 30, 40. Then, you know, we bounced on this ceiling enough times, you know, and it ran through, because I'm not showing you previously, but there would have been other touch points and it ran through. So now when it ran through, we've created a new floor and a new ceiling, but it ran through it, it ran up, and it, man, this was an aggressive thing. It was running up there. One thing to be scared of is when a stock or Bitcoin or Ethereum runs straight up and it doesn't stop at levels. It sort of just makes a beeline straight up. Anything look that way now? How about everything? How about everything? S&P 500, the Dow Jones, the NASDAQ. It was like a beeline straight up. It skips through a lot of the normal processes for growth. And what that does is it creates a very, very weak floor, a weak foundation. So when it goes up high, it typically falls just as hard. And you can see that. It went up super high, touched around 60, fell back down into the range, which it had now loosely created between 40 and 50, traded in that range. But then it ran up around 68, and you can see here was our high. We've never really seen it higher than that, but everybody says, oh, it's going to go to 100. It's going to go to 100. It's going to go to 100. Now, maybe it does, but we got a lot of levels we got to cross, and we're now down around 29,000. So what does that mean? That means we're at a floor. That's a solid floor. It's hit this many times, and I probably have another one here, another one here, another one here. We probably have 6 more touch points. It's a strong floor. So if you buy at that 29 to 30 floor, and you sell at the 40,000 floor, or even, you know, at 29, sell at 35 floor, what is that called? Can anyone tell me what that's called? It's called making money. Has anyone that you've ever met been upset that they made money? Has anyone you've ever met been upset that they've made money? Anyone? The answer is no. No, I've never met a single person that was upset that they didn't make money. But you know who's upset? The person that lost money that said, oh my God, you should have held on to that longer. You should have held on to that longer. You shouldn't have sold it at 40. My God, it ran up to 55. You should have held on to that. You know what that person did? Lost money. But you know what they are? A guru. A guru. They know all the answers, but yet they just lost money, and you made money, but you didn't make as much as they think they could have. Does that make sense? You made money. You locked in your gains. You sold, you followed a process. You followed a set of rules. I bought it at 30. I sold it at 40. You made money. But the guru comes in and says, oh, you should have held that around 55. You would have made way more money. That guru probably didn't make money, but they think they did in their mind. Their gambler mentality says you could have made more. Why didn't you stay in? Why didn't you keep playing, blackjack? Why didn't you keep playing craps? You could have gotten it all back. You could have made more. That is the exact person that defines the fourth law of wealth. The fourth law of wealth says if you seek unrealistic returns, your money will flee you. That guy or gal, their money fleed them, but yet they're still the expert. This is what you got to worry about today. The world is full of guru experts. And you know why? Because they've never seen the downside. They've never seen the downside. They've never understood what the Great Recession did to their finances. Maybe they saw it from afar, but they never lost everything themselves. We are in a very unique time, only to be rivaled by the booming 20s. Okay, the roaring 20s. About the only other time, maybe a few other times, maybe the dot-com craze, that you can actually look at it and say, you know what, there was periods of time in history where people thought that they just couldn't lose money. You know why? Because they never did. Because we're in the longest bull run history there ever has been. So I didn't want to get into a Bitcoin lesson, whether this is, if I just erase this and I say this is the S&P 500, would any of you known the difference? Would any of you, if I erase this, what would you have known that this was Bitcoin? Or would you have said, well, that could have been NASDAQ, Dow Jones, S&P 500? Good. Because it could have been all of them and it would have been exactly the same. Please, in your investing, set your rules. All of you have been watching the markets. You've been seeing what's going on out there. And you're probably asking yourself, like most, is this the buying opportunity I've been waiting for? I've been getting messages and texts saying, is this the bottom? Is there enough blood in the streets? Should we buy? You see that Warren Buffett just went on and bought 40 billion worth of stocks. Is this the sign that is the time to buy? Well, let's really look at this. But to look at this, we actually have to look at previous events. We have to look at previous recessionary periods or just before the recession. So if we did that, if we go back in time and we look at the roaring 20s, we'll call it 1926 to 1929, just to condense some time. And we look at 1929. It was the end of the roaring 20s. It was a bull market like you'd never seen. Everything was going to the moon. The little stock tickers were coming out. Everybody was rich. Everybody was making money. Everybody was buying stocks. Hell, the shoe shine boy knew more about what stocks to buy than Kennedy Sr. It was the awesome times. Everybody was doing well. Wall Street was roaring. Everybody had money. Credit had just started coming into things. So people were trading on margin, not even their own money, just backed by the collateral called the stock certificates. And the market started to pull back. So we had a couple of big drops in 1929, and all of a sudden everybody was like, this is the buying opportunity. They bought deeper. Even wealthy individuals, bankers, bought on the way down. They bought large chunks trying to prop the markets up because they could certainly manipulate the markets. And that would bring it up. And everybody say, oh yeah, it's going to the moon. The best stock pickers were saying it was going to the moon. Until all of a sudden it let loose. It let loose, and the rest is history. From 1929 to 1933, you saw what we now know of as the Great Depression. Do I need to say more? Everybody thought there was a buying opportunity on those first initial dips, but that was just the precursor. Same thing, dot-com crash. You saw lots of weaknesses in the markets, and we could go through every recessionary period through time. It's always the same. The markets are roaring. Everybody's making money. Everybody's rich. Credit's easy. Everything is good until it dips. Fear sets in. Some of the people sell out. They're like, I've had it. I'm done. People like me are just, I'm done. I'm not taking the risk. The risk doesn't equal the reward or justify the reward. So people like myself get out and other people are buying, because in order to make money in the market, there's always somebody selling and always somebody buying. Or there's always somebody losing and there's always somebody making money. It's just the way that the capital markets work. .com. 2008, same thing. But 2008 was a bit different because that sucker just let loose and it just continued to crash and burn. But there was weakness. And the smart ones in the market saw those weaknesses. You've all seen the movie The Big Short. They saw the weaknesses. They saw the signs. They took action and they all became billionaires, didn't they? But how about you? What were you doing? You saw a buying opportunity. Your advisors, which I was at that time, I was at the peak of my financial advisory career, right when 2008's Great Recession kicked off. What were we doing right before that? What were we being advised to do? Buy the dip, keep buying, buy low, dollar cost average in until the Great Recession hit. Fast forward to where we're at today. We haven't hit bear market territory, but we're damn close. And you've got the news saying, is this the buying opportunity? Warren Buffett's buying, so you should buy too. I want you to paint a picture in your head of a boat, a big ark. Okay, you've all heard of the story of the ark. And what's happening right now is the markets are going down. The media is saying, this is the buying opportunity. This is the buying opportunity. Get it while it's low. Blood in the streets. Everybody load on the boat. Everybody get on the boat. Come on, get on. Everybody on the boat. This is your last chance. It's going to go up and you're going to make a ton of money. Get on the boat. While big money is getting off the boat on the other side. While all of you and the other sheeples are jumping on the boat, everybody else, the lions, are getting off. The ones that have the knowledge, that have the experience, are all exiting the boat while everybody else is blindly getting on the boat, just following the person in front of them, the Uber driver, the Lyft driver, the coworker, the friend, the family that all said, now is the time to move in. It's the time to buy. You're going to make so much money. Then when everybody's on the boat, they sink it. Folks, I'm just going to tell you point blank. If you think the buying opportunity has started and you are not a professional investor, if you're a professional investor and you're trading short-term trades, giddy up and go. Volatility is your friend. This is where you make all your money. But the average person, the majority of the people listening to this episode, this time right now is a trap. What you're seeing, what you're witnessing is smoke and mirrors. If you're buying in, you're making one of the biggest mistakes of your life. Because eventually they're going to sink the boat. The boat's going down. The Fed already told you what they're going to do. The Fed actions will drive the market and the economy straight down. How far? Well, how fast did we come up? Go to the pandemic. How fast did we go from that point to where we're at today, which is an all-time record high, and the line is almost straight up. They call it a hockey stick. That happened in about a year and a half. Market's been a straight line up. So if we fall and we go down to where we were during the pandemic, which is a very weak floor, chances are we're going to hit that floor, we're going to bounce, and it's going to go continually down to what levels? I think we'll stop at 2011 levels. So if we were to fall from where we're at today, which is already what people think is the low point, already what people think is a time to buy, there's blood in the streets, which there is not. The blood in the streets right now is the equivalent of this. I want you to picture this. You grab a needle. You prick the end of your finger. You give it a good squeeze. You got that little ball of blood on the end. I know some of you don't like blood. You rub that on the floor. That's the blood in the streets right now. It's an illusion. It's all made up in your mind. There is no blood. There is still greed. Everybody still thinks this thing's going to go up, except for the big guys, the big dogs, not the Warren Buffetts, because he's playing a different game than you are. He can play the long game. He can buy today and wait that thing out 10, 20 years if he wants. You can't. You might think that the money is in the long haul, but you won't make it there. You need to really assess this period of time and decide, are you willing to lose 20%? Can you handle 20%? Oh yeah, Chris, that's no problem. I can handle 20%. Okay. Can you handle 30% drop? Oh, well, I don't know. I think we'd be okay. 40%, 50, 60, 70, 80%. Can you handle that? Well, no, you can't. Because there's a little thing that most people should know, but nobody seems to talk about, called investor sentiment. Some people call it volatility index. Some people call it fear. We'll just call it investor sentiment. You won't make the long haul. Not this time. You might think you can, but now let's throw some headwinds into your mix. Let's just say you lose your job. Can you wait? Can you afford to maintain your style, your level of living that you are today without your job? If the answer is no, can you handle the risk? Are you going to need that money? Are you going to need to go into those investments, that 401k, that brokerage account, that crypto account? Can you leave that money sit for the next 5 or 10 years if you lose your job? Bet you can. What if your spouse loses his or her job? What if all of a sudden outside pressures happen and now all of a sudden you've got other things to deal with? Because if you can't afford the bills, you can't afford your mortgage or your rent, what are you going to do? You're going to sell your stocks. You're going to sell those mutual funds. You're going to sell those ETFs. You're going to sell that crypto that you've been buying, waiting for it to go to the moon. And when you do, where did you sell? Probably pretty close to the bottom, because that's usually what happens. Everybody thinks they can hold out until they can't, because they forgot about all those unforeseen things that come along with the recession, let alone a depression. But I see this as being the next Great Depression, because they've kicked the can so long, created the longest bull run in history. And the Fed actions and all the things I'm seeing all point to one place, and that is in time going to be the next Great Depression. Now, you don't need to believe me on that. What you need to do is really need to look at yourself in the mirror, and you need to ask yourself, can you handle the heat in the kitchen? Is it too hot? Because right now, if you're getting panicky and nervous, this is nothing. This is the precursor. We haven't even got to the main attraction. Hell, you're not even at the second commercial at the movie theater. Hell, you haven't even heard about the popcorn yet. These are just the ones when the first timers come in, the newbies, the ones that get there a little bit early thinking the theater's going to be filled. AMC loves you guys sitting there. You got your popcorn, but you haven't even seen the commercial for the butter that goes on the popcorn. You're like, oh, wow, I wish I would have saw that before I got this popcorn. That looks good. You get the drift. The main attraction hasn't even happened. The first leg hasn't even happened. You might be seeing the starts of it, but there's no blood in the streets. There's no buying opportunities if you're not a professional investor. This is a trap. They want you on the boat before they sink it, because that's how capitalism works. One person has to lose for another person to gain. One person has to sell for another person to buy. Wake up. Wake up. Because what you're looking at is decisions that will have unbelievable effects, not just for the next year, but for the next decade, maybe for the rest of your life. Are you ready? Folks, now is the time to really prepare. It is the time to get ready. It is the time to look at yourself in the mirror and say, am I going to be ready for the storm? Am I going to be ready to take advantage of what could be the biggest opportunity of your life, or could also be devastation to your financial future? This is the time where you got to ask those hard questions. This is the time where you got to start looking at, how do I prepare? I want to do a quick little training here. And this little training is going to be very quick. All I want to do is I want to show you how I was able to make over 100%, but that's not the best part. I was able to make over 100% doing a simple strategy, and it only took me about 3 months to do this. Now that sounds like a long time, right? But it took me 10 minutes, and it took 3 months to make well over 100% return. So we're going to talk about that, but that's not the important part. I want to show you how I used a different vehicle, a privatized banking system, to not only help me make over that 100%, but I made money twice. You see, I didn't just make money once. Almost everything I do, I make money twice. So let's get right into this. So very quickly, what I have to explain to you is exactly what happened in March. So we all understand that in March, we had a drop in the stock market, right? The market plummeted, came all the way down to about the 19,000 level on the Dow Jones. So not that that's important, but what also happened during that period is what happens in every drop in the market. Almost every single stock went down. So if you just took the stocks that you were really passionate about and you watched them, like the one I'm going to talk about today is Tesla. So all I did, Tesla, which is TSLA, all I did when I watched this whole thing going out. Now, first and foremost, remember one thing, my money was in cash. Okay, and we're going to talk about my money, where my money was. So that's an important thing, because a lot of you are like, oh, this is all great, but when the market goes down, I don't have the money. Well, you will if you listen to what I'm saying and how I did this. But when the market dropped, I watched Tesla, which is a company that I love. I think it's an awesome company. I love the things they're doing, and I'm passionate about them. So that's the kind of stocks I buy, companies that I'm passionate about. So when Tesla dropped, what I did is at about this point, when the market bounced and it came back, I bought Tesla at $415 a share. Okay. So I don't know if any of you understand what that means if you bought Tesla at $415 a share. Now, I know a lot of people that bought Tesla at or around $415, they held on to it and they waited through the 5-for-1 split and all this stuff, but I didn't. You see, when I buy a stock, I want to buy it and then I want to sell it at my specified profit. Now, my profit on most stocks, I'll take my gain at between 10 and 20%. But I don't usually want to stay in a stock longer than, I'm going to be honest with you, 24 hours. Tesla, I held in a little longer because what happened is Tesla rocketed up, okay? Tesla went way up here and Tesla got well over, let's just put it got up to about 1,800. But I didn't wait for it to get to 1,800. You see, I sold Tesla at about $920. That's what I sold Tesla at. Now, a lot of you would sit there and you would say, why would you do that? Why would you sell Tesla when it only got there? Well, why did I sell it? Because that's my rules. I follow a strict set of rules. Did I leave some profits on the table? Yeah, but was I upset? Folks, I doubled my money. I more than doubled my money in this transaction in less than 3 months. To do this, this took me less than 3 months. Okay? So less than 3 months is kind of what that took me. So in looking at this, the one thing I want to tell you is, yes, you're like, yeah, well, that was then and this is now. Well, this is going to happen again. You see where the market's at now, it's going to drop again. And my guess is when it does this big drop, we're not going to stop at 19,000 on the Dow. I think we have the ability to go down to 16,000 on the Dow. So if we're going to go down that low, it's like limbo, right? How low can you go? Well, that's a good question. But now that's not the important part of this training. What's really important is, where did the money come from for me to buy that Tesla stock? Isn't that the important thing? It's great that I made money. So many people made money back then, but you know, here's how I did it. I made money twice. So I made money twice, not just once, 2 times in this transaction. So where did the money come from for me to buy Tesla? Well, I have this account called an infinite banking concept, okay, or infinite banking policy. I call it privatized banking. And I have 7 of these plans. And what I do, either on a monthly or an annual basis, I take my pay. So I take my income. So my income's up here, right? And I take a large portion of that and I move that money into my infinite banking policies. And then what do? You see, a lot of people are like, well, I couldn't do that. But here's the thing. I put the money in my infinite banking policy, and then I very quickly find a way to get that money out. You see, I put it in and I take it out. And I take it out as loans. Because when I take it as loans, if I'm making 4% plus dividends, okay, let's just call this 6% for simple math. The combination of the dividend plus that is around 6% I'm making on every dollar. So I take my income and I move it into this privatized banking policy. Then I got to find things that I want to use this money for, right? I got to find things to move this money. So what am I doing? I'm moving my money, because that's what banks do. You've never met a bank that took your deposits and put it in your little box in the back with your name on it. No, the bank moves it. They take your deposits and they lend it out. You should do the same thing with your money. You see, money has to be in motion. If you want to make a lot of money, you want to build true wealth, you got to mimic what the banks do. You got to mimic what the wealthy do. And what do? They move money. Just like a raging river, your money has to be moving, because let's look at the alternative. What we are taught to do with money, which is just park it and leave it somewhere, your money's sitting in a stagnant pond. And what happens in stagnant ponds? Things rot, things die. Would you eat a fish out of a stagnant pond? I hope not, okay? You'd eat a fish out of a raging river, right? Like a live, fresh caught trout or salmon, you'd love that. But out of a stagnant pond, one of those black marshes, no way. But that's what your money's doing. Your money's sitting in that marsh. My money is moving. So when this opportunity came up to buy Tesla at $415, you know what I did? I went down here to my banking policy and I immediately took out $18,000. Why 18,000? Well, that's how much money I had in that account at the time. That's all. So whatever money I had in cash value, so this is going to be cash value in this plan, whatever money I have, I'm always taking it out. The rest of my money was already out there working for me, but I had 18 grand in one of my policies. So I took that 18 grand, I moved it up here, I moved it into my brokerage account. I immediately bought Tesla, and then I bought it at $415 because I bought low. And then what did I do? I sold it way up here, not at the top, but I sold it when it hit $920. Paid $415, sold it at $920. Then when I sold it at $920, what did I do? I took that money and I moved it back into my banking policy. Now, why would I move it back in my banking policy? Because folks, when I took the money out the first time, I took a loan. The insurance company charged me 5% simple interest. Now, that's not a big deal. Some of you might get hung up on this. First off, a lot of you are hung up on the loan. You see, I don't have to pay this loan back. I'm the bank. I took the money from my bank. This is my bank, my privatized banking policy. I took it from my bank. The insurance company loaned me the money at 5%. How much am I making? 6. So would you be okay making 6 and paying 5? Right. But I'm making more than that because my money's been there compounding. So my spread is bigger. But you'd be okay making 1% on money that you took out of your account, right? You would. Don't be silly. And then if you took that money, you moved up here and you made all that, well, the faster I can get that money back into my banking policy, that is when I don't have to pay the 5%. So when I sold Tesla, I immediately moved the money back in my banking policy. And now that money is being used elsewhere. Where else do I use that money? Well, I do real estate deals with it. I loan money to real estate investors. I do private loans. So I do all sorts of private loans. And how much are my private loans? 12%, folks. I loan money at 12%. What else do I use this money for? I buy cars this way. Okay, I take the money out, I buy a car, and then I repay my bank instead of paying the Bank of Buffalo, so to say. You see, this is all I do. And this is how I made over 100% on my money, but this is how I made money twice. Because I didn't just make the money on Tesla. My money, while it was taken out of here, was still making money. In the simplest form, if I'm paying 5 and I'm earning 6, am I not netting 1%? I am. But you see, my money has been in this account building and compounding. See, that's the thing you have to understand, is you have to understand what Albert Einstein understood about compound interest. And if you don't know what it is, what you need to do is read and study this, because it's the 8th wonder of the world, so Albert Einstein said. He said, those who understand it, earn it. Those who don't, pay it. Do you want to pay interest or do you want to earn interest? What if you could do both? What if you could pay yourself interest and you could earn it at the same time? That's what I just showed you. This is how I made money twice without having to do anything really different than what I was already doing. This 18 grand was just money that was saved over time from my income. And then I just constantly move that money in and out. Private loans, cars, buying Tesla, buying Apple, buying any stock you want. This is how you do it, folks. Get good at moving your money. And also, to move your money, first, you have to be in control of your money. So I hope you guys like this. This is my training for the day. We'll see you guys in the next one.